Hi, everyone. I am joined today by Dr. Richard Johnsson, a PhD economist and founder who is leading a quiet revolution in business finance by democratizing a 250-year-old banking secret. After seeing firsthand how global banks maintain stability by canceling out mutual debts rather than moving physical cash, Richard is now on a mission to bring that same clearing model to the everyday economy, challenging the trillion-dollar status quo of late payments and high interest debt to empower the Australian small business community. Welcome, Dr. Richard Johnsson. If you'd like to give a bit of your own introduction and tell us a little bit about your journey, how you started Clearitt, and so far how how far you've come along.
Thank you very much. It's nice to be here. Yes, this idea is something I came across over 20 years ago now. But back then, you couldn't really do it for several reasons. It would have been like starting Netflix in the 1980s or something like that. So, but things have developed. I kept track of it, and now I have built this and made it available for normal people. But it comes from all my self-studies in economics, which is some of the old books here, to get an understanding of what has happened and not happened in the financial system. But one thing that stands out is, of course, that the banks are doing something completely different than most of us, and most of us have no idea of what they're doing and how efficient they can run their own, mutual obligations. And we can contrast that to how normal business has struggles that are completely unnecessary. And with the tech development and everything, it's possible to extend that to normal companies.
Now, you've worked as an you've done your PhD economics and you've worked in major banks as well. What was the specific moment you realized that, while banks move money with incredible efficiency, this real economy of SMBs are still stuck there? And like you said, it's Netflix wouldn't have worked in the 1980s. Was there a moment in your career where that got built up with that experience and your knowledge and expertise where you realized, okay, this is an idea that could work in the general wider economy?
Well, I was actually, because I did a lot of self-studies, I got to meet a lot of very, very clever people. And one guy in particular, he had probably published more books than anybody know about. And so it's rather, if we're talking about that kind of level of reading. So he told me one day that, Richard, you need to study the benefits of clearing for normal people. And I knew what clearing was because in Sweden, the numbers you put in front of your bank account when you transfer money is called numbers. I knew that, being a little boy. So I knew what it was, the concept, but then I had to figure out, okay, how do I apply it? What's the best way of doing this to the greatest benefits? Because it's also like the transition and all of that part. So that came to me one day. I would say that, when the student is ready, the teacher appears. So that's really what happened in that case with this man. But then also to figure out how to do it, that just came to me like a download almost, because I was driving to my work in the car, and I missed like 5 exits on the highway.
Yeah.
So I must have been in like half coma for 10 minutes on the highway there. And then I just got it, and then and that's what's the business is all about now. But I guess I was suited for that because part of my PhD was part of it was about the national accounts of the country. So I knew where the size of the various parts of the economy were and how they were connected. So I had some, unique back knowledge in that as well, which helped me kind of figure out where to start.
Absolutely. Interesting. Now, from Clearitt's general perception. It's more of it's kind of using the same model that banks use to clear mutual debts between each other, but banks usually rely on a very small network, whereas your idea is expanding across to the wider economy of small businesses as well as larger organizations. But as somebody who's not so close to your business and the idea, I do want to understand, how do you overcome the challenge of getting more customers, clients, more companies on this network for this model to actually work? And if that's not the case, does it still work? Let's say if I have a company and I'd like to get on the clearing model, but my suppliers or my customers aren't, how would I be benefiting from that?
Banks are doing. So the banks back in the days, and this was back in London 250 years ago, they were using checks heavily back then. So you received checks that were put out in another bank's name. So you had to walk over those checks to the other bank and say, "Give me cash for these checks." And then, of course, that bank had to walk over to you, and then you're crisscrossing the city to get to all of the other banks. So that was, of course, hard labor for these clerks, and people had to fork up cash before they had received cash themselves for the checks and so on. So very similar to how a normal business is now. You need to get your hands on the cash before you can pay out cash. So what they figured out then, instead of running around and chasing cash, they could just meet at the pub and walk around the table and put all these checks in boxes. And then what they did then is say, okay, we have mutual demands here across the banks. Let's net it off and just settle the balances. So instead of moving around all this cash, they could just settle the balances. And that has a large number of benefits to them. Of course, they didn't have to go around the city, so it saved them that kind of time and the cost of doing that. They didn't have to go and chase each other about that money anymore, because it was settled on the net basis. You didn't need the cash, so all was settled on the net basis rather than the gross basis. They also didn't have to reconcile that who paid what, who to what, who. It was all settled on the net basis. So that instead of transactions having to be recorded when they come in and out, it was all a ledger entry. Yes, these are fine. So it's just a big tick in the box instead of having to deal with every single transaction. So that's, of course, very different too. And that takes away a lot of the errors of recording things in the wrong way and everything. And then, of course, they didn't have to go out and look for funding, because they could have said, oh, we need to pay out all this money, but we don't have the cash, so maybe we sell this obligation or something like that. But they didn't need that kind of funding, that they didn't need to go to lenders or anything like that. So that's, of course, also a cost advantage. And then, of course, they knew then that every day maybe they got millions and millions and billions of cash that they had to pay out. But suddenly they know that they can net it off already. So they don't need to keep that readiness for all these cash payments tomorrow or the day after and the next month and next year. Which, of course, means that that takes out a big chunk of the cash flow problem and makes your cash, as the cash need disappears, your cash problem disappears. Your cash flow problem disappears. So they eliminated a big chunk of their cash flow problems straight away. So that's what they've been doing, the banks. And if you look at this from a lens of a normal company, they have all these problems that the banks don't.
Yeah.
So you can get all these benefits as a business too, but then, of course, it gets to the other part of your question. And the banks were a few of them, and they work together in a network. So you have to work together to coordinate this, and someone has to coordinate that, and that's our role in this network. So to make this to work really well, of course, everybody should use this. But to start that and get everybody to use something is not easy. But at the same time, you don't need everybody else to use it. You just need your customers and suppliers to use it. And that's, of course, the same it works on any social network. For example, if you use Facebook, you don't care that my friends are on there. You just care that your friends are on there.
Hmm.
So the network effect and all of that's of course helping, but it's not the core issue here. And the network effect is more helping Facebook because that's their moat against competition. It's how they can monetize it and all of that.
Hmm.
So for us to grow this, we just need or what we're doing is we're telling companies to, okay, we can take you from A to B and to start managing your money more like a bank. It won't happen overnight, but let's get started. And then we show them that, because we ask them for their top 5 customers and suppliers. So if we get only a couple of them come on board of your customers and suppliers at the moment, that's happening in parallel with more companies than you. And if you do the maths, if you can grow from 1 customer to 2 new customers to 4 new customers, and so on, it's growing very quickly. And if we do this in parallel with more than 1 company, of course, we know that their customers and suppliers will all be on here anyway in 6 months to a year. So we just have to get this started, the ball rolling, so to speak, and people get that.
Yeah, no, I think you raised quite a few interesting points there, and I feel like when you speak about the problem of cash flow, the eliminating that problem of cash flows, I think specifically for small, medium businesses who don't have a lot of access to capital, and they are usually facing this problem where their payments are not arriving on time and they're not able to pay their bills, and they often have to take up loans from a variety of different sources. And I feel like this model provides a bit of a social impact to the economy as well. Could you touch a little bit upon how Clearitt could move beyond just the business, but also empower small medium businesses out there as well?
Yes, let's do that in a few steps. So the first of all is, of course, that we got to recognize that this is a problem that facing normal businesses, that you need to get your cash, get your hands on the cash so you can pay your bills, your staff, your taxes, and so on. So you chase your customers, pay me, but they often then are in a situation where they need to get paid before they can pay you, which is exactly where you are. And then their customers in turn is the same thing. So everybody's in the same boat here. We need the cash to flow to make this work. And that's a common problem. But if you have cash flow problems, all the solutions out there are one-sided. It's only helping you. You can send your invoice, you can borrow money, you can do all these things, or use some AI-powered system to speed up your accounting or something. But it's all only helping you. But it's a common problem, and a common problem should have a common solution to sort out the problem. So that's what clearing is. That's what the banks figure out. They had a common problem and they figured it out. So that's great. But the more social impact of this, or one part of it, is that when you sign up a customer, it's happy days. You shake hands. It's a mutual benefit. It's a win-win, and that's how business should be. But then you get to the payment. That interest breaks down because you want the cash and they want the cash. So who's going to get the cash? So that's a friction there, which is unnecessary. So the clearing of these invoices without cash takes that out of the equation. So we're restoring this kind of like harmony of interest, of mutual benefit, of the win-win. We take out that grind and that boring stuff, which to some businesses is a horrible thing, to chase your customers, about money and pester them when they're supposed to be your biggest asset. So that's one part of it, but there are way more parts of it. Of course, we are shifting power here from centralized institutions that are getting more centralized, actually, because now, even 10 years ago, 20 years ago, if I owed you $5, I would just give it to you. But now we can't really, that's not very convenient today. So today I send it to the bank, and the bank sends it to another bank, and then it arrives at you. So everything is getting more and more centralized here. But with Clearitt, you don't need that. You know, it's like if you buy me a cup of coffee today and I buy you a cup of coffee tomorrow, we can net it off. We don't need to send, you know, $5 each way. We can do that anyway. So we're taking out the need for these, you know, highly centralized organizations and putting the power back in the hands of where it belongs, in the relationship between the customer and supplier. You can bypass those because you can sell things without sending money through that unit. Of course, we are a centralized unit too, but we're not there to be part of the flow. We want to eliminate the flow, so we're having the opposite effect. So that's some of the benefits, but there are more, which I normally don't speak about because they are kind of version 2.0 on Clearitt, but we will start clearing wage payments as well. And that means as a wage earner, you actually got, you know that you will get paid at the end of next month. And then that's a very good IOU. You know, like just like an invoice, you can sell your invoices today and so on, and you can, with Clearitt, you can start netting off your invoices, but we want people to be able to net off their personal expenses against that very good promise to get paid at the end of the month. And so you can go out and do the grocery shopping without cash because everybody knows that you will get paid at the end of the month. That's, of course, a much bigger step for us to take because this involves, you know, all the wage earners and so on. So, but when that happens, let's just pretend that happened overnight, then you would, as a wage earner, get paid at the end of this month, and then you wouldn't, when you want to go to buy the groceries, you wouldn't have to use any of that cash that just landed in your bank account because you can go shopping against your future payment rather than the money you already have received. And this means that the average wage earner will get a month of salary that they don't need to spend. And if you look at how the world looks, you know, it's a lot of people who are struggling with the cash flow, you know, the personal expenses here or income, and have very tight margins. But suddenly, all the wage earners would end up having a month of salary in the bank account, which, of course, it's a complete game changer. That's like the biggest transfer of wealth in the history of mankind, but it's actually not coming out of anybody's pocket. It's just a shift in the system, which is, of course, an amazing thing. A lot of people will go and waste that money, of course, but on average, of course, that would be very helpful for people that are living on the margin. So,
okay, that's very inspiring from a social aspect, I believe, and from the sounds of it, you have a vision that moves beyond just looking at the businesses and their interests, but moving down to the wider economy and specifically the wage earners as well. And that's a very interesting point that you've raised. How would you say, let's imagine now, you know, from a client's perspective, you start building off on a network and you've signed up a few businesses now along with their trading chains. How do you sure what's the business model for them in terms of, you know, what do they have to pay? Is there any fee? How do you make sure, you know, you're retaining those clients as part of your network? Are there any incentives there for businesses to join in and jump on this model apart from the theoretical aspect of it as well?
yeah, look, we're asking for a commitment fee because if we spend some time, you know, reaching their main customers and suppliers to get them on board as well. But the company or our user, our customer, can of course use this to their advantage because it's actually a sales argument for them to get their customers because their customers might not have to pay cash to buy something from you because they might be able to net things off. So that's, of course, a sales argument that you can use. And of course, you can also use it the other way around, clearing, so it's easy for them to get paid and easy for you to pay them. So, and you know, a lot of people have these kind of established relationships. You can strengthen them as well. So you can actively, you know, use this to your advantage. And of course, it could be an advantage over the competition as well that you have.
Mhm.
So that's certainly the case for people, that they don't just have to sit back and wait. But after we have our setup fee, so to speak, which is more of a commitment fee, that's not really part of how we want to earn money. But then we only have a success fee. So if we save the money through clearing, we have a low fee on that. So we're targeting, you know, the mass market, not signing up one company and you know, getting a lot of pay from them. But it's a success fee instead of because we could set up a subscription fee as well. But if you want to grow a network and you have a subscription fee, if people see, no, I didn't get a lot of benefits out of this at the moment, maybe it's coming later, but I won't. So they will cancel the subscription. And if you want to grow a network, you know, with a lot of nodes, if one breaks, you can drop out a big network, you know, because you have this kind of how it works in networks. You have like you have some links that are very important. So you can suddenly, you know, have big in the expansion of the network. But using a success fee, if we can't help you this week, it won't cost you anything. So you have no reason to leave. You know, you just keep your account there, and then we notify you, like, look, we've got more opportunities to clear here, and it's just happy days. So we thought through that and decided that, and also we don't want to. We're basically earning money if you don't have to use cash, which is the opposite of a transaction fee. It's non-transaction fee, so to speak, which is very different as well. So and that's, you know, we think that's fair to everybody involved, and you know, that we get paid in relation to how much value we provide.
Okay. So from the sounds of it, it seems like you only receive payment if you actually save money for the client. And apart from the nominal commitment fee or the setup fee at the beginning, but your main, and I mean, for someone to compare that against a traditional financial system, it does seem like a win-win situation. But how do you break through the skepticism that typically meets a new financial system? And I'm, it requires a lot of ambition, it requires a lot of vision from your end as well. But typically, specifically in this industry, in the new financial systems, how do you break through that skepticism?
Well, if I came to you and everybody was already doing this, would you hesitate?
Absolutely not.
No.
No.
So that's how we present it. You know, we're going there, and we have, you know, we're on at the fork of a road here from your perspective, that you can jump on this and do it and help out and make this happen quicker, or you can sit back and be one of these guys who doesn't just want to piggyback on everybody else. And so all we need now is an hour on your time and a small upfront fee. And then we will start working on this. And then down the line, if we grow the way we are now, you know, all your customers, suppliers will be doing this.
Mhm.
It's like your early days on Facebook, you know, it's just the way it is. So
Yeah.
it will happen. And then we, of course, we give people money back guarantees and stuff like that. If, you know, this doesn't work out in 6 months' time, you get the money back. But, you know, we know it will. So, but when you're speaking to people like this, people know nowadays, and that's very different to 20 years ago. People know how these networks work. They know how, you know, Facebook and LinkedIn and all these, the virality and network effects. People are aware of that, which people have absolutely no clue about 20 years ago. But now everybody has first-hand experience of that already.
Mhm.
So we don't find that very hard. People realize that, okay, it might not happen overnight, but there's no fee, ongoing costs and whatever. Let's crack on with this, you know,
Yeah.
and use it to our advantage. And so it's all positive.
So you're saying this wouldn't have been impossible back, a few decades ago, but could you expand a little bit more on what has changed exactly in terms of user awareness or technology in the last few years that finally makes this pathway viable today?
Well, I think first of all, if you look back 20 years, in most countries like maybe the UK, Sweden, where I'm from, Australia, where I live now, there were like a handful of banks. And here you came and wanted to start something that could change things. You wouldn't get a license to do that. You wouldn't get permission to do that, and they wouldn't work with you. That has completely changed. You know, the fintech, the open banking regulations around the world, all of that. That's of course stopped that. And I've sat down with all the banks here, all the major banks here in Australia. I sat down with the head of the central bank here in Australia to talk about this. So there's no like people like, yeah, okay, yeah. So that has changed a lot since in the last 20 years. The technology, of course, as well, because I could build the system 20 years ago. I actually had the stock exchange of Sweden, well, the smaller of the two in Sweden agreed to build the tech because they are doing clearing and stuff in the back end of their in the stock market trading. So, but so they knew what that was, but you know, integrating that with you know, tons of small businesses would have been impossible. People would have faxed invoices, you know, and the small businesses didn't have you know, even an internet connection, and certainly not smartphones. So smartphones has of course changed things a lot as well. But the real big change are probably the cloud based services and the APIs.
Yeah.
You know, the connections between different platforms. Because even 10 years ago, people had, or people still did, have their accounting on a hard drive under your desk. And that was like you almost put that was your you know, your core business intelligence in one platform. You wouldn't share that, you know, with your accountant possibly, but that's about it. But then suddenly people put all their accounting on the cloud, and they, you know, some people were of course, oh, but maybe someone else can see it then. Yes, of course, but we're past that. You know, everybody has using cloud accounting and whatever now. So all and you know, of course, the banking as well as it's just all online and so on nowadays. So all of those things add up, and the user experience, like I touched on before, the people I used with network solutions and all of that now. So I think there are many points of that have changed, and I've kept track of them over the years and said, yeah, that works. So that works. That would be great for this and this. And even the blockchain that will play a role here as well, encryption and all of that.
Perfect. Okay. And any challenges at this point in time that you envision for Clearitt on a macro and a micro level for your mission and for yes.
No, not really from a macro perspective. I mean, the big thing is that the timing for starting a business has to be good, you know, and that's kind of there's been a lot of studies, and there's a famous TED talk about that online as well. That the likes of, you know, Uber and Airbnb, you know, it worked and it spread quickly because it was kind of a downturn in the economic activity, and people need scramble for extra, you know, cash on the side. So that helped them expand. So I think the economic situation isn't great, and people are struggling more and more. Small businesses are folding here in Australia at an increasing rate, and a lot of it is, of course, cash flow related rather than sales. So we do have some, you know, we are in a good position from that perspective, and you know, interest rates or whatever, everything is playing out really in our favor. Or if there's nothing like externally that's looking like it's gonna go in the wrong direction for us. So that's all good. On the micro level, it's just like we're running a business. You know, it's cash flow and struggles, and, you know, people hiring and firing, whatever you end up in, and that's a normal business. That's of course something we experience as well. So that's just something that, like any business, you have to deal with. So,
Right. Now, on that point, we are seeing a shift towards agentic commerce where AI agents are going to be managing transactions in the next few years. That's the prediction for, for how businesses are going to work. And in a world where Clearitt's netting engine is automated and invisible, does the role of traditional invoice disappear entirely?
Well, invoicing will, of course, I mean, we have to separate the accounting term from the practical thing, because you can raise an invoice, but you used to post that, in the mail in an envelope to someone, and now we're emailing a PDF and so on and so on. So those things can keep developing, but I think the whole procurement industry, I think it's going to be a lot of AI automation and stuff like that. But what's missing is, of course, there is still shuffle around gross payments. So we fit very, very well into that whole automation play because we are doing something that the AI can't do, because you can speed up the gross transactions as much as you want, but there's no need for them. So we're kind of ahead of all these AI solutions in some aspects, because they are trying to sort out the problem that we eliminate. So that's of course the case. So I think we're in a good spot with all of that. I actually wrote something on that, I think, on LinkedIn, saying that we're ahead of that whole AI stuff, because they're addressing they're creating one-sided solutions to a common problem. And it doesn't matter how much efficient you make it, it's still a one-sided solution. It won't sort out the underlying problem.
Okay. Finally, I'm going to ask you more about a legacy. Like you said, shared problems require shared solutions. When you look back 5 years from now, what is the ripple effect you hope Clearitt has had on the mental health and prosperity of the Australian small business owners and the wider economy?
Well, I think we will be at the stage where people have, of course, much less stress around these issues. Running a business is hard enough, but take out a lot of this boring stuff, which is just time consuming and unnecessary, and not by automating it or anything, but literally eliminating the problem, because it's proven. It's trillions of dollars go to these systems in the high end of town every day, but not for normal people. And that's what I want to make life easier. But I want to have 1 billion plus users. I want to make have an impact here, where I am at the moment. So that's what I'm doing this for. To make life easier for and ease the suffering a little bit, so you can live a better life and not be so stressed out about boring stuff like cash flow.
Well, Dr. Richard, it has been a pleasure. Thank you so much for sharing your journey with us. And it's rare to speak with a leader who isn't just trying to make money move faster, but is trying to redesign the very architecture of how we manage debt and liquidity for a more equitable economy. So thank you so much. And yes, hope to speak again soon.
Yeah, thank you for your time. Thank you.